Our next guest helps oversee 15 billion euros in assets at Allianz Global Investors. Thomas Tilse is head of portfolio strategy, and he joins me now from Frankfurt. So, Thomas, we're seeing the relief in the markets after this U.S. debt deal, this framework for a deal. Is that relief going to stick around, do you think?
Sorry, I'm standing hearing you. Good morning. Could you repeat your question, please?
Sorry about that, Mr. Tilse. We seem to have some trouble. I was asking you what you thought of the U.S. debt deal. Are we going to see the relief in the markets continue?
Yes, well, I think you were right with the earnings seasons in the U.S. Beating estimates by a large margin. I think if you look at the markets this morning, the way it looks is that the U.S. budget decision leads to a relief, especially with the large risk premiums we had from the political side here in Europe. We not only had the US budget discussion, we also had the European crisis. So my basic thesis from this political stuff is that it will work its way out slowly out of the markets, and that we will focus back on the economics of the developments, for example, the company earnings and the solid state some of these companies are in the US, as we have seen in a good earnings season, and also in Europe. You've been mentioning Germany disappointing to a large extent, but I think that was due to high-flying expectations, because looking at the US, we had the soft patch discussion, we had the budget discussion, we had leading economic indicators, ISM and consumer confidence falling. I think that lowered expectations, and that's why the US is in a comfortable situation. Yes?
I just want to look first a little bit more at this debt deal, because you say it's going to take some time to work itself out, as is the European crisis. What if we get a downgrade to the U.S.'s credit rating? Is some of that priced in? What kind of market reaction are we going to see?
Well, I think the key issue is for the banks. It will first hit probably large holders of U.S. treasuries in the U.S., but also worldwide. And I think the U.S. banks will be first to look at, but also European banks. As you mentioned, the earnings seasons, European banks partly have been disappointing. If you look at the large Swiss banks, for example, and also Deutsche Bank, they've been on the disappointing side. And I think through the financial sector will have some shivers going if the U.S. is downgraded, because they have to readjust their view on holdings on U.S. treasuries and also other good rated countries.
Just coming back to earnings again, you mentioned that you thought that some of the expectations had gotten ahead of themselves when it came to Europe. But we've also heard from a lot of these companies that have missed estimates that they're maintaining their guidance going forward. So my question is, do you think they're being too optimistic? And also, just summarize your strategy going forward for the next couple of months.
Well, yes, expectations have been high-flying, especially for Germany. And if you look at the earnings reports, for example, from BASF or Siemens, I think their business developments have been in line, but just expectations have been much higher. And if you look at, for example, the chemical or industrial companies, they basically reiterated, and also the automobile sector, they reiterated their expectations for the second half. They just dampened high-flying expectations. So company heads have been in the function of dampening expectations rather than increasing already high-flying expectations. I think that's what has been happening. So for me, earnings reports are basically in line, and I think we are up to better earnings in the second half based on a better U.S. economy, the end of the soft patch, and the end of the political discussion. So what is the strategy forward? The strategy forward is basically tipping your toe back into risky assets. I think equities and credits, everything that has to do with good companies that have great business on a worldwide basis, globally operating companies, I think they will be fine in the second half. So the strategy is invest in global equities, increase your weightings in equities once the political stuff is resolved.
Right.
Tip your toe in risky assets, buy high yield credits, and be careful for treasuries and other state-related debt.
Thomas Tilse, perhaps a buying opportunity, but do so carefully. Head of Portfolio Strategy at Allianz Global Investors.